Why is Gen Z flocking to invest in volatile cryptos, non-fungible tokens, and other alternative investments? Is this risky behavior or savvy maneuvering in an evolving financial world? And how can we learn from their tactics regardless of our generation? These are the questions we will be answering today. Welcome back, everyone. It's me. Let's start by addressing the elephant in the room. When it comes to finance, Gen Z has been making some questionable moves. Remember the GameStop short squeeze of 2021, when retail investors banded together on Reddit to drive up the share price and make hedge funds bleed? Yep, that was largely Gen Z and millennials flexing their collective financial muscle. But with so much volatility in the markets and new investment options like cryptocurrencies, non-fungible tokens, or NFTs, and the creator economy, what exactly are they investing in and why? Well, let's begin by examining the economic backdrop against which Gen Z came of age. The Great Recession of 2008 left an indelible mark on their psyche, instilling in them a deep-rooted skepticism towards traditional institutions. And then there's the looming climate crisis. Gen Z knows that the problems facing our planet will have profound implications for their future. So it's no surprise that they re-looking beyond traditional investments in search of more sustainable and socially responsible options. As we dive into the trends shaping Gen Z's financial decisions, remember that while their choices might seem baffling to older generations, they're part of a larger shift in the financial landscape. By understanding what drives Gen Z's investment patterns, we can all gain valuable insights into the future of finance and perhaps even learn a few tricks ourselves. The first trend we see is the digital gold rush. What if I told you there is a new gold rush happening, and it's not in the Wild West of the 1800s, but in the digital frontier of today? You heard that right. We're in the midst of a digital gold rush, and Gen Z is leading the charge. They're not panning for gold in rivers, but scouring the internet for the next big thing in cryptocurrency, NFTs, and the creator economy. This new gold is all about owning a piece of the digital pie, and Gen Z is all over it. They're buying NFTs that represent digital art, investing in cryptocurrencies that promise to disrupt traditional finance, and supporting creators who are building new platforms and communities. Just like the real gold rush of the past, this digital gold rush is attracting fortune seekers from all over. But unlike their 19th century counterparts, Gen Z is doing it all from the comfort of their keyboards. But wait, aren't these investments too risky? Well, not if you ask Gen Z. They're used to living on the edge, whether it's posting their lives online or sharing their personal stories with the world. They're not afraid to take risks, and they're certainly not afraid of new technologies. In fact, they're embracing them. For Gen Z, the digital gold rush is more than just a chance to make money. It's a way of life. It's a chance to express themselves, connect with others, and build a better future. And hey, maybe make some money along the way. However, Gen Z's investment journey goes beyond the glitz and glamour of cryptocurrencies and NFTs. They're also diving deep into the world of ethical investing. With an eye on the future, Gen Z is less interested in short-term profits and more focused on long-term sustainability. They want to make money, yes, but they also want to do it in a way that aligns with their values. Enter the ESG score. ESG stands for environmental, social, and governance, and it's a scoring system that evaluates a company's commitment to these principles. Companies with high ESG scores demonstrate strong performance in areas such as climate change, human rights, and corporate governance. Gen Z is looking for investments that don't just make them money, but also make a positive impact on the world. They want to be part of the solution, not the problem. So when it comes to investing, Gen Z isn't just looking at the bottom line. They're considering the bigger picture. They're rethinking about the impact their investments are having on the world, and they're voting with their wallets. Moving on, let's talk about community-driven finance. Imagine being part of a group of like-minded individuals who come together to make investment decisions, share ideas, and support each other along the way. That's what community-driven finance is all about, and Gen Z is leading the charge. From Wall Street bets to decentralized autonomous organizations or DAOs, Gen Z is finding strength in numbers. They know that by joining forces with other investors, they can achieve more than they ever could on their own. Take Wall Street Bets, for example. This online community of retail investors is known for its unconventional approach to investing and its ability to move the markets. Members of Wall Street Bets share their trades, discuss investment strategies, and help each other navigate the often tricky world of finance. Then there are DAOs, or decentralized autonomous organizations. These are groups of investors who pool their money together to invest in a wide range of assets, from cryptocurrencies to real estate. DAOs are governed by rules set down in a smart contract, and anyone can join. Gen Z is embracing these new forms of community-driven finance because they offer something that traditional finance does not. They offer a sense of belonging, a feeling of empowerment, and the opportunity to achieve financial freedom together. Next, let's explore tech-savvy tactics and hyper-personalization. Gen Z's affinity for technology extends to their investment strategies as well. They're leveraging algorithm-assisted investing and micro-investing apps to make smarter, more personalized financial decisions. Algorithm-assisted investing uses data and artificial intelligence to analyze market trends, identify investment opportunities, and optimize portfolios. This allows investors to make more informed decisions and potentially improve their returns. Meanwhile, micro-investing apps enable users to invest small amounts of money, often as little as a few dollars, into a diversified range of investments. These apps typically use algorithms to create and manage investment portfolios tailored to individual investors' needs and risk tolerance. Gen Z is drawn to these tools because they offer a convenient, affordable, and personalized way to invest in the markets. They appreciate the ability to tailor their investment strategies to their own financial goals and risk appetite. Plus, they love the convenience of being able to invest from their smartphones in just a few taps. But it doesn't stop there. Gen Z is also turning to social media for financial education and inspiration. Financial influencers have become the new gurus of finance, sharing their investment strategies, tips, and tricks for building wealth and navigating the markets. Gen Z is devouring this content, eager to learn from those who have already achieved financial success. One reason for this trend is the rise of social media platforms like YouTube, Instagram, and TikTok. These platforms have democratized access to financial education, allowing anyone with an internet connection to learn about investing and build their wealth. Gen Z is taking full advantage of this by following financial influencers, joining investment communities, and participating in online discussions about money. They're also leveraging the power of social media to build their own personal brands as investors. By sharing their investment strategies and results online, Gen Z investors are not only educating themselves, but also inspiring others to follow in their footsteps. This creates a ripple effect that can help more people achieve financial success and build generational wealth. In addition to these trends, another notable aspect of Gen Z's investment journey is their side hustle mentality. This generation is not afraid to hustle, and they're willing to put in the work to achieve their financial goals. Many Gen Zers have multiple income streams, ranging from freelancing and part-time jobs to starting their own businesses. This approach provides them with the necessary capital for their initial investments. Moreover, Gen Z is increasingly investing directly into their own entrepreneurial endeavors. They recognizing the potential for high returns and long-term growth in certain industries, and they putting their money where their passion is. Whether it's developing a new app, launching an e-commerce store, or investing in a promising startup, Gen Z is eager to capitalize on emerging trends and disrupt traditional industries. Furthermore, with a large number of Gen Zers working in the gig economy, many are earning substantial incomes through freelancing, contract work, and part-time gigs. As a result, Gen Z is able to diversify their portfolios by investing in various asset classes and building a robust financial foundation for their future. Now you might be wondering, how do Gen Z's investment choices hold up in the face of market volatility? Well, despite the roller coaster ride in the markets, Gen Z remains unfazed. They understand that investing is a long-term game, and they're in it for the long haul. While previous generations might have been shaken by sudden price drops or economic downturns, Gen Z sees volatility as a natural part of the investment process. They've grown up with technology and are comfortable with risk. In fact, they thrive on it. For Gen Z, the allure of high returns and the potential for long-term financial freedom is simply too tempting to resist. Despite the risks involved in investing in emerging asset classes and small companies, Gen Z is undeterred. They understand that with great risk comes great reward, and they're willing to take the plunge. So what can we learn from Gen Z's bold investment moves? Well, for starters, we can admire their adaptability and willingness to embrace change. Gen Z has grown up in a rapidly evolving world, and they quick to adapt to new technologies and trends. They not afraid to experiment with new investment options, and they always on the lookout for the next big thing. Additionally, we can learn from their long-term vision and patience. Gen Z understands that building wealth takes time, and they're not looking for get-rich-quick schemes. They're willing to invest in the long term and let their investments grow over time. Finally, we can take inspiration from their risk appetite and willingness to push boundaries. Gen Z is not afraid to take risks, and they always pushing the boundaries of what is possible. They not content with the status quo, and they always looking for ways to innovate and improve. While Gen Z's investment journey is unique and shaped by their experiences and perspectives, the lessons they're learning along the way can benefit everyone regardless of age. So as we look to the future of finance, let's take a page out of Gen Z's book. Let's embrace change, think long-term, and be willing to take calculated risks. Who knows? We might just find ourselves on a path to financial success sooner than we think. Thank you for watching. If you found this video helpful, please give us a thumbs up and share it with your friends. And don't forget to subscribe for more insightful content. Have a great day.